Greetings and good day. I hope you're doing great. I'm here with you for the daily analysis of Brent crude oil on March 11th. As you witnessed last week, after the outbreak of war between Iran and the United States, Brent crude oil closed its weekly candle with a 16.5% increase.
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
Following the escalation of tensions at the beginning of this week, on the first trading day, we saw oil prices open with a 15% increase. After opening at around $104.4, oil prices continued to rise and reach their highest level in recent months, at about $113.7. After this movement, the price dropped, and on Monday we witnessed more than a 17% decline in oil prices. One of the main reasons for the drop in oil prices this week was the G7 summit regarding the release of oil reserves. The price increase that occurred for oil pushed oil prices to their highest level since 2022. And subsequently, today we saw that the International Energy Agency, or IEA, proposed the largest release of oil reserves in history. As a result of these factors, as we observed, there was a decrease in oil prices and the price of Brent crude dropped to around $80. Along this path, the price reacted to the 4-hour FVG zone at $85. Among other oil-related news, we can mention reports from the DPA news agency stating that Germany will take action to release part of its national oil reserves. Additionally, according to another report, Japanese Prime Minister Takaichi has instructed the Minister of Industry to implement emergency measures to control gasoline prices. Takaichi announced that Japan will begin releasing part of its oil reserves from March 16th, and this release of oil reserves will take place even before the official decision of the International Energy Agency. The IEA will announce its position on the release of oil reserves today at 1 p.m. GMT, and afterwards, 1 hour later, there will be a meeting of the Group of Seven regarding the release of 400 million barrels from the oil reserves of these 7 countries. Alongside all the points mentioned, we should keep in mind that the release of oil reserves is only a temporary measure, and a sustainable decrease in...
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Oil prices will only be possible if military tensions are reduced. In fact, the message we can take from the actions of various countries in releasing their oil reserves is that, for now, markets cannot expect a quick ceasefire between Iran and the United States. Due to the high sensitivity of oil prices to tensions, as you have seen, oil can currently experience more than a 17% increase or decrease in price in a single day. So, under these circumstances, I still do not recommend entering into trades, and if you do decide to enter a trade, I suggest that you stick to your stop-loss orders. Furthermore, as a possible scenario, with the start of oil reserve releases by various countries happening simultaneously with the withdrawal of buy-side liquidity, we can expect oil prices to begin to decrease, potentially reaching the $85 range. Wishing you success and profitable trades.